Testify this afternoon. Mr. Chairman, my tax plan, simply titled Jumpstart America, focus on a business perspective tax reform. Other tax reform measures might focus on loopholes or pick winners and losers. Mine does not. Frankly, we must begin to empower America's greatest asset, the small business community, the last real hope to turning our economy around and cash flow America. Last Congress, when the conversation on tax reform began to take shape, I asked myself what areas were important to me. Someone who is a second-generation small business owner with over 44 years' experience, still owning my business, and someone who has just about seen it all when it comes to our national economy. I remember dollar gasoline. I remember 20% interest. I remember the '88 meltdown. We all remember 9/11. And I can tell you that Main Street America is hurting more now than ever before. As I travel around my district, and even since my first election, I talk to my fellow small business owners. I talk to manufacturing sector people. I talk to people in distribution, my friends in the oil and gas industry, and frankly, the average American entrepreneur just starting out. So, Mr. Chairman, this is what I hear. First, they want a simplified tax code, both on the individual and corporate side. While there is debate on just how long it is, I think we can all agree the tax code needs to be simplified. H.R. 2842, the Individual Rate Simplification Act, brings the personal code down to 20% for the first million and 30% for everything over $1 million. As many of the members already know here today, business owners often use their personal tax returns as a flow-through for their companies. Taking the individual tax rate to a simple 20% creates a unified business income tax rate, which is globally competitive. Next, all businesses, big or small, want to spend less time on taxes. According to a poll conducted by the National Federation of Independent Businesses, most surveyed want a less complex tax system. Small business owners in particular found it frustrating to devote much of their time to taxes when they could instead focus on revenues in their company. H.R. 2946, the Incentivized Corporate America Act, reduces the corporate tax rate to 20%. The United States' current rate is around 39%, the highest statutory rate of any developed country in the free world. As we've seen over the last few years, companies are literally moving their headquarters to avoid rates. That is wrong and un-American. Lowering the tax rate would incentivize corporations to move their businesses back to the U.S., helping us to regain our competitive edge in the global economy. The next set of bills focuses on moving to a cash flow tax base. H.R. 3017, the Invest in America Act, cuts the capital gains and dividends to 15%. H.R. 3213, the Fixed Asset Relief Act, allows 100% expensing of fixed assets, providing businesses the ability to deduct tangible personal property from the tax base in their year of purchase. Instead of having to schedule out deductions, a small business owner will be able to take the entire deduction immediately. As someone who has personally done this, I can tell you this is a game changer. Bonus depreciation reduces the tax bias against investment and allows businesses to create new jobs and put more people to work. Finally, H.R. 3216, the Paycheck Relief Act, reduces the payroll tax for not only the employee, but also the employer by 2%. From 2011 to 2012, employees enjoyed a reduced rate that helped boost take-home pay for Americans. In addition, if future administrations want to empower small business owners who employ half the private sector jobs, combining a reduction in employee payroll taxes is crucial. In 2010, the CBO explained that the Congress, by cutting the payroll taxes, would boost employment more if given to the employer as well. If these three bills sound familiar, well, they are not new ideas. Capital gains and dividend rates at 15%, accelerated depreciation on assets, and lowering the payroll tax all have been used before to help jumpstart America economy in the past, and I believe it will help jumpstart America again. The next pillar of my tax reform plan deals with keeping America competitive with other nations. We absolutely need to lower the repatriation tax rate in this nation to 5%. While making it permanent, not on a one-time holiday basis. H.R. 3083, the Bring Jobs Back to America Act, is self-explanatory. It creates more jobs and brings jobs back to America we never had. In addition, this plan recommends not eliminating last in, first out as an accounting method or using an international method that puts American companies at a disadvantage. Industries that use the LIFO accounting method include car dealers, the beer and wine distributors, and almost anyone in the manufacturing industry, also in oil and gas. Although proponents of doing away with the LIFO point to a $100 billion pot of money, a carry forward as we call it, I assure you any LIFO will destroy American companies and kill Main Street. In addition, using international financial reporting standards or eliminating LIFO altogether will not solve America's debt problem. Frankly, I was extremely disappointed to see LIFO used as a pay-for in the bill produced by the committee's former chairman last time. Over the last year, I've worked closely with members of the LIFO Coalition to advocate that LIFO not be used as a revenue offset in any tax plan moving forward. I hope their message is clear. Mr. Chairman, lastly, I would like to conclude with a bill that is very personal to me. Under the leadership of Chairman Brady, the House just last year passed H.R. 1105, a bill that would repeal the estate tax. I'd like to take a moment to tell members of this committee a quick story. In 1939, a young man started a car dealership to realize the American dream. When he died, that dealership was passed to his son along with a death tax liability. A mere 3 days after the father's death, the IRS came to collect and wanting 55% of the value of the business. His son nearly declared bankruptcy, but was fortunate to gather enough resources to keep the business afloat and save hundreds of jobs. The son still runs his dealership and employs over 100 people. Mr. Chairman, that son is me. My story, unfortunately, is not uncommon, as many farmers and ranchers in my district have similar stories. Let's end this tax once and for all, and I appreciate your continued support. So in closing, Mr. Chairman, I spent the last 2 years talking about this tax reform plan, and although my staff might be tired of it, I hope you can tell that I'm very passionate about it. Jumpstart has the support of Douglas Holtz-Eakin, the former director of the Congressional Budget Office, and former FDIC Chairman Don Powell, who said the plan was a thoughtful, common-sense approach to one of the most important issues facing America. Last month, I was honored to have Grover Norquist, America's for Tax Reform, call my plan a model for pro-growth tax reform. I encourage the committee to consider cash flow, pro-growth, pro-business-friendly tax reform ideas when considering tax reform in the future. I want to again thank you for allowing me this time this afternoon, and I welcome any questions you may have. Thank you.